It's Wednesday, December 7th, 2022. Markets closed a couple hours ago. Earlier, Dow Jones was up around 170 points. It closed up only a half a point while the rest of the markets closed in the red. So Dow Jones closes up 0.53 when it was up 170 points earlier today, managed to close up a half a point while the rest of it all closed in the red. These markets are struggling. This economy is struggling even more. I'm going to share some articles with you today. The data is literally horrifying. We are heading not just into a recession, we are heading, I think, into a very, very bad depression, ladies and gentlemen. The Hill, economists, a U.S. housing recession has already arrived. The housing index declined to 33. This is the lowest this index has been in a decade. Anything under 50 spells trouble, ladies and gentlemen, and we are sitting with a housing index of 33. If there's any advice I can give anybody today, is do not buy a house. Do not buy a house at this point. This is now the worst possible time to buy a home. If you can sit it out on the sidelines for the next 6 to 12 months, I think you're going to be very happy that you did. Big discounts are coming. I believe we are on the verge of the biggest housing collapse we have ever seen. Yahoo News, 270,000 home buyers who bought in 2022 are underwater on their mortgage. Let me repeat that for the people out there that write me, especially from Las Vegas, still trying to justify that the Las Vegas real estate market is still vibrant and doing well. They are lying through their teeth. 270,000 home buyers who bought in 2022 are underwater on their mortgage. This means that they owe more money than their house is worth. The article goes on to say 40% of homes bought this year have less than 10% equity left to tap. This is going to get real bad, ladies and gentlemen. This is going to get really, really bad. But I still have people, especially from Las Vegas, saying it's just a correction. You don't know what you're talking about. Things are fine here in Las Vegas. We know they're not because we see that tourism and gambling is slowing way down. It's been slowing down since June in Las Vegas. And this economy and this housing market has been slowing down across the entire country, and it's going to continue until it seizes up and we see a full-blown collapse here in the housing market. The hedge, credit card debt hits all-time high just as U.S. savings rate plummets to 17-year low. Total consumer credit rose $27.1 billion in October. Credit card debt rose by $10.1 billion. The state of the U.S. consumer at this point is in dire straits. The personal savings rate is at a 17-year low while credit card debt is at an all-time high. So all this unsecured debt and credit card debt at all-time highs, what could possibly go wrong? Here's one from Fox Business. I mean, listen to what I'm reading to you today. This is all from different news sites all over the U.S. This one from Fox Business. Nearly 70% of Americans struggling to pay grocery bills, survey finds. 83%, it says, rely on some sort of coupons or loyalty program to put food on the table. We look at coffee prices up year over year. 14.8%, cereal up 16.8%, eggs up 43%. People are having a very hard time putting food on the table. And it still amazes me that people will write me and try to tell me that everything is okay, that I'm exaggerating, that the economy is doing just fine because the drive-through at In-N-Out was busy, so everything's okay. The airport was busy, so the economy's fine. These people have no idea what they're talking about. Take 5 minutes of your time and do some due diligence and start reading some of the data, some of these numbers. They're horrifying. This is really getting scary. And you know, we haven't seen anything really bad happen yet, and we won't until people begin to not be able to eat. They're beginning to cut out a lot of different foods now, the amount of foods, the brands, the types of meat, fish. They're cutting that out. But if they have to continue to cut this out, we're going to see people really, I believe, act out because they're going to get very frustrated here, especially when they can't put food on the table for their kids. Car insurance rates set to jump 7% in 2023. That's following the 9% spike we got in 2022. So think about that. In 2 years, a 16% hike in car insurance just over 2 years. On top of the cost of gasoline, the cost of driving a vehicle, the cost of these vehicles has gone through the roof, even though they are beginning to decline. But how are people hanging on at this point? I really don't know, other than they're going so far into debt in order to hold on. I don't know how people recover, how they pay this debt back, how they come back. This is going to be... It's going to be a tough time here, and the tough times start in 2023. The tough times haven't started yet. The tough times in America start in 2023. Here's another one from CNBC. Freight rates from China to West Coast down 90% as global trade falls off the cliff. A 90% year-over-year drop in freight rates from cargo from China to the West Coast. What is this telling us about the U.S. economy? This means that the Kohl's, the Targets, the Walmarts, etc., they're just not ordering from these manufacturers in China. I think this is a major canary in the coal mine to what's happening in the economy. Just think a year ago when they couldn't even get you couldn't even get a container. And now there's so many containers laying all over Long Beach and Los Angeles, they don't even know where to put the containers at this point because all we have now is empty containers. There's no need for them because all the big retailers are canceling orders. They're ordering less because they see what is coming down the pipeline here. I think Christmas sales are going to be absolutely dismal, but we shall see. Here's another one from CNBC. Used vehicle demand and prices continue to decline from record highs. The Manheim Used Vehicle Index, which tracks prices of used vehicles sold at its U.S. wholesale auctions, has declined about 16% from the record levels in January. I think it's going to go down a lot more. I just drove by some car lots today, and they are filling up with used cars, no doubt about it. So we're going to have less people that can qualify to finance a used car or a new car. Less people have the money. Less people have the credit. So I don't know what they're going to do with all these used cars, but I do believe we're going to see big discounts. You know, I said this in the past. I think we're going to see a very strange economy where we're going to see inflation and deflation at the same time. The price of food and energy going up, the prices of used cars, the prices of real estate all going down, RVs, boats, all going down. So we're going to see some things continue to go way up, and we're going to see things go way down. It's going to be very fascinating to see how it all plays out. Here's another one from CNBC. Just 8% of Americans have a positive view of cryptocurrencies now, CNBC survey finds. What do you think? What is your view of cryptocurrencies now? I think they're pretty much done. The blockchain technology, I believe, will be around for a very, very long time, but I think cryptos are about done. I think people who pulled money out of their homes to buy this stuff, sold everything that they had, gambled, used credit cards, these people have paid a severe price here, and many of them will never recover. And I think that there was nearly 20,000 cryptos at one time. How many of them are gone? How many have gone to zero? See, this is the difference when you're holding something real like gold versus a cryptocurrency, which is backed by nothing but faith and hope that it's going to continue to go up. Gold is different. Gold, you actually have to pay for manpower and horsepower to pull it out of the ground. It has a 5,000-year history. And right now, gold's sitting at right about $1,800 per ounce, and it's going to go up much, much more. And the difference is, many people can't access their cryptos now because they've been stolen or they've just gone to zero. Nothing's changed if you're holding gold or silver. You can access it wherever you put it, probably within a minute. It's still there. It still has value. And the physical value versus the paper value just continues to skyrocket. And when you see what central banks are doing with China, Russia, and the BRICS nations, gold is going nowhere except up. Doesn't mean to say it can't go down. It's not going to fluctuate, that there's volatility. But I believe as things get more chaotic, as we see more uncertainty in the global economy, more debt, countries, central banks, and people are going to seek out gold because of safety and the insurance that it offers. Carvana shares tank as bankruptcy concerns grow for used car retailer. Carvana was down 42% today. Year to date, they are down 98.4%. I think they're about done. They currently have about 10,400 employees. If I was working for Carvana, I would probably start looking for another job here very, very quickly. And you have to ask yourself, 10,400 employees, these people have to pay rent, they have mortgages, they have car payments. What happens when they lose a job? And we're watching this happening in tech, in the auto industry, in the mortgage industry, in trucking, in manufacturing. People across the board are losing jobs, and we are going to really begin to see massive layoffs in 2023. And what are these people going to do? How do they hang on? How do they pay the bills? We're going to see so many food lines, and the food lines are just going to get longer and longer. The homeless crisis is going to continue to magnify throughout this country. We got big trouble, ladies and gentlemen, big trouble, and you need to be preparing today for big trouble that is coming tomorrow. It's already begun. It's here, and it's not going away. It's going to get much worse. Here's another one today that I thought was really interesting. Rent the Runway reports stronger quarterly sales as shoppers look to save money. This was on CNBC. People are opting to rent their fashion, to rent clothes versus buying it. This is where we're at today, where people have now, they've been renting cars forever, called leases, renting furniture, renting houses. Now they're renting clothes. This is how bad it's getting, where people are opting now just to rent their clothes versus buying them. So I think that's another sign of the times of where we're at, and just how pressured or under pressure the consumer is at this point to hold on to some sort of middle class, even if they have to rent now. Now we'll have people renting into the middle class. They can't buy into the middle class. They're going to have to rent into the middle class. Here's one from The Hedge. China confirms it is mystery massive gold buyer with first official purchase in 3 years. They believe that this is where the 300 tons of gold went. From July to September, central banks bought 399.3 tons of gold. But the thing is, they could not figure out, they figured out where about 100 tons of it went, but they couldn't figure out where the other 300 tons went. Well, it looks like it's China, and they are going to continue to look at alternatives to the dollar. And they're not buying cryptos, ladies and gentlemen. China's buying gold. The central banks are buying gold. July to September, nearly 400 physical tons of physical gold purchased. You look at the BRICS nations, you look at Russia. Now we're looking at a petro gold currency, a yuan possibly backed by gold. Nobody really knows right now, but we are going to see an alternative to the dollar in our lifetime. That I truly do believe. There is a slowdown happening. Wells Fargo, Bank of America CEOs point to cooling consumer amid Fed hikes. Jamie Dimon, I believe, said yesterday that the money runs out mid-2023 for the consumer. That all this relief money, it's over mid-2023. I believe it's running out right now. Most of these CEOs, including Jamie Dimon, don't even believe we're in a recession right now. I believe we're in something far worse than a recession at this point. I believe we are now in a depression, and there is going to be no soft landing. There is only going to be a crash landing as we crash into a massive depression. And all these people who said that the Fed wouldn't raise rates, all these people who said there wouldn't be a housing crash, told us that housing will just go up forever, that the economy is doing just fine, inflation's transitory. Everybody has been wrong. All you have to do is look out the window, and you can see exactly with your own two eyes exactly what is happening, what has been happening over the last couple years, especially the last 6 to 12 months. The housing market is scary because it employs so many people across this country. And when it goes, it's going to take everything down with it. Some people are going to prosper and take advantage of this. Most people are going to be losers. The people flipping homes, the people who sell homes, the people who need to sell a home, who are losing equity or upside down right now. There's going to be a lot of losers out there, ladies and gentlemen. So be careful. And many people bought more house than they could afford. Many people just continue to live beyond their means. And, you know, everybody wants a 3,000 square foot house and 2 Dodge Chargers. These people are going to lose, and they're losing now. The repo man, extremely busy. We're going to see more defaults on housing, more foreclosures as foreclosures are continuing to pile up. The problem this time around versus 2008 is going to be the jobs market. People just are not going to be able to afford to keep homes and stay above water if they don't have jobs. While inflation is eating what wages they have and what savings they have, the inflation that we're seeing right now is going to continue to destroy any amount of savings, it's going to destroy wages, and job losses and layoffs are going to destroy the housing market. So prepare for the worst, ladies and gentlemen. Prepare for the worst, because 2023, we're going to be real deep into some serious stuff. God bless. Stay safe. Please give this video a thumbs up. Make sure you share this video, and make sure you subscribe to this channel. God bless. Talk to all of you very, very soon.